Hello there, welcome to Trade of the Week, which was actually placed on Tuesday, August the 30th this time. It was done by Josh Mahoney. Now, we did do it slightly later because, well, of course, last Friday we had the Jackson Hole event, and that was really driving the market sentiment after the London markets closed. And it was also a bank holiday on the Monday as well. So realistically, nobody would have placed a trade in these circumstances. Well, unless obviously you're very brave, of course, which is exactly why we didn't. So this is what we did. In the end, we went short on New Zealand dollar. So it was actually a Fibonacci resistance as well. So it's getting a little bit technical. Chris Beauchamp is here to explain exactly what we're talking about. How did it transpire then?
The trade wasn't the greatest. I think we had a rebound in the New Zealand dollar against the US dollar during the second half of this week, so that actually the Kiwi dollar recovered because the US dollar took a bit of a hit due to the economic data we had on Thursday and Friday. So you can see this is roughly where we would have placed it down here, and I think his stop loss really came out to about 72.80. So that's, I think we'd have had that stopped out during the course of the week due to a change in fundamentals, which the price was then reacting to. If you look again at the broader term trend on this one, it definitely is rallying all the way through the year thus far. So I think if you're looking at the big picture chart here, you could start to see a reason why this pair actually does push on to new highs for the year during the course of September.
All right, let's move on and talk about what you're going to be analysing this week and what you've got your eyes on.
So we've had non-farm payrolls today, and that has come in weaker than expected, but that's pushed down the US dollar, which has pushed or helped indices, stock markets like the FTSE 100 to push higher. So my argument would be I think we could see the FTSE 100 now rebound over the course of the next week and indeed beyond. And we'll start with the long-term picture here, because you can see this is 2016 on the FTSE 100. There's our February low, and since then we've rallied significantly, to say the least. Even Brexit couldn't stop the uptrend, and dips such as those we had in June and the beginning of August have been furiously bought. Now, we had quite the pullback over the last couple of weeks on the FTSE. We were up at 69.56 on the 15th of August. We saw it drop all the way below towards 6,700 over the course of this week, but now it looks to be turning higher. So I think the long trade is the one to watch out for. But let's always remember the but here. If we zoom in, you can see how this is today, and we've shot about 100 points higher thanks to the non-farm payroll. So you can see how we're overbought on the RSI on the hourly chart. Stochastic on the hourly chart is very overextended. So while I think it will continue to go up in the week ahead, you need to wait for this pullback. I wouldn't chase this 100-point move. So we are looking for it perhaps Monday, Tuesday, just to pull back. Perhaps watch that stochastic. If it drops back down towards the oversold end of the spectrum, back down towards minus 50 or so on that indicator, that might be your dip that you're waiting for. So I do think it will go up, but we're just waiting for a slightly more attractive entry point.
Okay, gotcha. So your trade is long FTSE, but we're waiting for that crucial moment to get stuck in and take it on.
And if we're looking in terms of stops, of course, that's always the crucial one to bear in mind. So that's why if you chase it up here, it might fall but still rise into the week. So actually, I think we're putting our stop all the way down here towards 67.20 as and when the trade goes on. That's certainly the area to watch out for. But I do think with the dollar weakening next week, or looking like it will continue to weaken into next week, you should see gains across the board in indices. And of course, don't forget Labour Day on Monday from the US, which means no US markets, which means you might have a bit of a difficult day because little volume really going through the market. So things really get back in earnest on Tuesday.
So you are poised.
I think that's the best way to
dive
phrase
in,
it.
yes, for your prey, which is long FTSE. So you can relax over the weekend and then get stuck in, as they say. So that is the trade of the week for Monday onwards. We'll be analysing the outcome as usual next Friday. Have a great weekend. Goodbye.